Welcome to today's market report. European stock markets traded largely higher on Friday, continuing the strong gains from the previous session as solid economic data boosts optimism over the region's outlook. DAX in Germany traded 0.3% higher, CAC 40 in France rose 0.4%, while FTSE 100 dropped 0.4%, underperforming as a strong pound hits the performance of the index's major exporters. UK retail sales jumped 9.2% on the month in April, a substantial rise from the 5.1% increase in the previous month, and indicative of consumers returning as COVID-19 restrictions are rolled back and shops gradually reopen. The Eurozone also received positive economic news as PMI data for Germany and France remained firmly in expansion territory. Europe's two largest economies reported a hefty rebound in services in May, driving their economic recoveries even as factories battled shortage and delays. The major European indices has closed sharply higher on Thursday, with the DAX climbing 1.7%, CAC 40 gained 1.3% and FTSE 100 1%, as investor appetite for riskier assets returned. Credit Suisse upgraded its investment stance on continental European equities to overweight on Thursday, citing a catch-up in economic recovery, valuations and express liquidity. Helping the tone, the World Health Organization's regional director for Europe said the vaccine being used on the continent from Pfizer, BioNTech, AstraZeneca, Moderna and Johnson & Johnson appeared able to protect against the current variants in circulation. Richmond stock jumped 5.5% after the luxury goods company proposed doubling its dividend, reflecting a 38% rise in the net profit in its fiscal year 2020-21. BMW stock rose 1.6% after the German automaker said it would have to set aside €1 billion, less than initially feared, for expected European antitrust fines for alleged collusion with rivals. Lufthansa stock fell 4.9% as the Thiele family, the second largest shareholder in the German airline, sold more than half of its stake. Oil prices edged lower on Friday, continuing the recent selling as traders started to factor in the potential return of Iranian crude supplies. US crude futures traded 0.3% lower at $61.74 per barrel. Brent contract fell 0.6% to $64.75 per barrel. Both contracts are down around 5% this week and on track to post their biggest weekly loss since March. Gold futures fell 0.2% to $1,877.70 per ounce, but are still on track for a third consecutive weekly rise. On the FX front, GBP/USD picks up bids near 142, extending the recent bounce of 141.70 after the UK's retail sales for April came out stronger than expected on Friday. Even so, the cable is barely securing the 0.05% gains, which in turn portrays the pair traders' cautious mood ahead of the key PMI data for May. British diplomat David Foss's disappointment over not getting the wanted deal for Northern Ireland also tested the GBP/USD buyers. Also on the Brexit side could be the need of the basic checks for the UK travellers while heading to Spain, France and Portugal, among other European nations. Also negative for the sterling pound could be the doubling of Indian strain of COVID for the second consecutive week. On Thursday, UK PM Boris Johnson conveyed optimism over unlocking while suggesting fewer fears from the Indian strain of the virus. Even so, the UK's successful recovery from the pandemic enables it to join hands with the World Health Organization to identify COVID variants. Following an upbeat reaction to the UK retail sales, GBP/USD traders need another strong reading, and hence May's manufacturing as well as service PMI will be closely watched. GBP/USD justifies its bounce from 10-day SMA to aim for the key hurdle around mid-142 142. However, oscillators are likely testing the pair's further upside during the run-up to 142.50 resistance conference, compromising an ascending trendline from April 20th and February's high. The 142 threshold and monthly peak near 142.20 offer immediate halts. Meanwhile, a 10-day SMA level of 141.28 can test the pullback moves before highlighting the 140.10 to 140 flat horizontal support area. Euro-dollar remains sidelined around multi-day high above 122. US dollar consolidates recent losses amid a small pickup in yields, while the index was held below 90 and was lost at 89.777. This is today's market news. Thanks for listening. We'll see you next time.